Hi and welcome to the Market Alert for Tuesday, the 2nd of January 2024. So before we get into the nitty gritty and a catch up from the last week and a half or so, I'd just like to take this opportunity of wishing you all the very best for 2024. So in this alert, we're going to have a quick whistle stop tour, see where we are, see what the markets have done, and build upon the sort of background of the market so we know where we're likely to go. And I would imagine that we're going to be back with a bit of a bang. As the headline states here, dangerously bullish. No caution signs. If there is a caution sign out there, it's arguably is the simple fact that there really are no caution signs out there, which obviously is doublespeak, but it's absolutely spot on. Risk abound after Santa Claus rally lifts stocks. Chinese equities have enjoyed a stellar Santa Claus rally, even though the country doesn't officially celebrate Christmas. You don't need to celebrate Christmas, you need to celebrate the fact that bonuses are paid in January. So from October, the seasonal trend is to bring the markets up as much as you can to make the bonus checks as fat as you can. So now we've hit all-time highs apart from the S&P, which we'll look at in just a moment. There could be a sizable pullback. So news, let's have a look. We've got none today. It's the first day back in the saddle, so no economic news. Ease everybody back in gently. Wednesday, what we start to see is the jobs numbers and FOMC meeting minutes. We've got to tomorrow evening as well. No rate change for this one, just a look at last month's ADP. If we've got ADP, then we've got non-farm payroll as well. So we've got enough to be getting on with it. We also got the CPI from Europe as well on Friday. So everything's sort of put back a day apart from the non-farm payrolls, which obviously is can't be because it would be Saturday otherwise. But ADP, usually Wednesday, they're out on Thursday. And JOLTS usually out on Wednesday, which it still is. So nothing today. Market's going to have to make its own mind up in its own direction. So let's have a look, see where the markets have traded for the last couple of weeks. And starting off with the Dow, let's go to the monthly chart. You can see that we've gone through the all-time high during the festivities. Let me just put in the new all-time high so you can see it. I mentioned 40,000 before as being a target, but 38,000 is more likely to be the target short term for this market. So you can see that 36,692 has now gone. It's more like 38,000 for this market. Daily charts, there you can see how the market's rallied. In fact, let's just have a look at this. In fact, let's go back to the monthly chart and let's just see how much the market's actually rallied over the last few months from the low. Get the right tool and we go from there up to the current spot. We were up 5,453 points. This is a massive move. The market certainly needs some sort of correction there. Daily chart, you can see the move there, massive move to the upside. 30 minutes or the last trading day, whatever that was, 29th of December, market sold off, but then it was brought back. Market's currently traded above the 29th high, and it's just sitting below it there. But like I say, this market is due for a correction. The bonuses are now in. We'll just have to wait and see what they do going forward. In the German DAX, again, we'll start off with the monthly. We've got a new all-time high there, 17,004. That was already in before the festivities. You can see that we're trying to move higher. Let's go to the daily. The last few days, the market's been moving higher with the half-day sessions and all-day sessions during the festive period. We're going to get back to 17,400 if it's to make another new all-time high, which you can see there. And the 30-minute chart from the 29th, you can see there pulling back and then going back as well above the high. Got the R2 there. So the market's got a bit on the upside, plus the 16,800 level there, the psychological level there in red. In the S&P 500, we start with the monthly chart. This is the one that hasn't got to its all-time high on this platform anyway. 4817. The market needs to take this out. We're at 4796. The high during the festivities, that also needs to be taken out. You can see the move in the daily chart there. Sometimes it's easier just to look at the weekly or the monthly, get a good idea of the background. And the 30-minute chart, again, you'll see the 29th sell-off recovery, and above the high was a half-day session, so the market back there. In the FT100 monthly chart, stuck in a sideways range. We've got the number up here for the all-time high, which is 8,045. That needs to be taken out if the market is to move higher. Daily chart, again, you can see the Santa effect there as well in this market. In the US dollar, still down, but back above the 5-bar moving average there at the moment. Bit of a short-term move back. Again, nothing to really see here. The market down. And let's have a look at the metals before we finish. And in silver, we can see that the market was sideways, but last trading day, they came in and hammered the market. There was a rollover of the contracts as well. Last trading day for silver, market up in response to this. A bit patchy volume-wise and whatever because of the holidays. 30-minute chart, market making its way up quite nicely at the moment through the high. Not that there's... we need a day session, complete session now to sort the pivots out, as it were. In the gold market, also moving up, but not battered down as much on the 29th and 28th as silver was. And the 30-minute chart, you can see a nice move there as well. So let's have a look at the gold-silver ratio before we conclude. So gold-silver ratio, you can see already being hammered to the downside, stuck in a bit of a range. Again, I'm still expecting silver to go down towards $20. Given the chance, we'll just have to wait and see. Big correction in the stock market will aid in doing that with no problems whatsoever. But at the moment, we need to break through this high if silver is going to be battered to head back up towards those 90 level for the gold-silver ratio, which you can see there. Okay, let's finish there. A quick whistle-stop tour, as I say, just to bring everybody up to speed with where we are, what news we got, and what the opinion of the market consensus is. Like I say, with at the moment, that it's dangerous by definition of the fact that there is nothing to stop it moving higher, which means there could be a black swan event around the corner as we go into January. Okay, that's it for this one. As ever, thanks for watching. Welcome back, and I will see you in the next one.